Hey, it's Clay Trader, and this will be a video chart on ticker symbol CIE. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several days worth of time, it's actually just today's price action broken down into 30-minute time slices. I like to do this time frame. I think that's a good job of telling the quote-unquote story of the price and just makes mapping out levels of support and resistance a bit easier to see. I don't mean to state the obvious or rub salt in one's wounds, but very bearish day. However, with the way that the price kind of closed out the day, it does bring up a very interesting situation. And it all revolves around the fact that the price started to go sideways. And our sideways point is being valued at, so let's get this line into place, right there at 62 cents. Maybe you're saying, wait a second, Clay. You're saying that what makes it interesting is the price just went sideways. Isn't that setting the bar kind of low? Yeah, maybe so, but let's keep things in a context. What was going on before the price finally started to go sideways during this portion of the day right there? You know, what was occurring before that? Well, I mean, just pure bloodshed. It was just down and down and down it went. So just finally going sideways, that makes things quite interesting. Now, don't get me wrong, and I wish the market was this easy. Just because the price has started to go sideways after getting beat up really bad does not guarantee that this thing's, ready to bounce up to 95 cents tomorrow. I'm not saying that. Now, would I be surprised to see some sort of bounce? Would that shock me? No, that wouldn't be shocking, but myself nor anyone else can say, oh yeah, but it is guaranteed to bounce. That's just not how the market works. There's no such thing as a guarantee. So if you are not good at putting together risk versus reward plans and stuff like that, then these are definitely the charts that you shouldn't be touching. But from a quote-unquote storybook perspective, 62 cents is very important for the simple reason if the price doesn't hold above it, well, then that just implies that the price is now putting in new lows, and if that's not any sort of bullish price action. So a very simplistic way to look at this is if this is going to continue to be bullish, then the price needs to, not put in any new lows, and that would be defined as anything below 62. Now, in the event the price does start to bounce, let's talk about a couple potential areas of resistance. First key area, if any sort of, worthwhile bounce is going to get started, right up there at the 69-cent mark. So 69 cents, that first key hurdle to try to, generate some more momentum on the bounce. If the price can push up through 69, the next key level up there at 73. So 69 and 73, in my mind at least, two key hurdles to really start to generate some interest and, start to set off some scanners and such and bring more and more eyeballs into it because people do like to play bottom bounces. And if you've been trading long enough, then you know that when stocks get beat up pretty bad like this, it can create some pretty attractive bounces. Not a guarantee, but if you've been around, you know exactly what I'm talking about. So maybe it can close out the week tomorrow with at least a dead cat bounce. Only time will tell. One of the biggest questions that I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.